Welcome to the Forex, and here we're looking at the US dollar. That 79.50 support there is also the support from basically April and also through to March as well, over yonder over here. So it is support. The market is also reasonably oversold at this point here, so we could certainly get a bounce from here. But secondly, if the 79.50 fails to hold as support, then there will be buying options, of course, and that would be first up in the euro, but also there's turning points in the US dollar, yen, and we'll have a look at that a little bit later. But we track in the morning session here, we track the pound yen and the euro yen, so those shorts will show up there as well, and we'll be looking at those. So that 79.50 here is quite a critical point. It does have support here. It is oversold at this point here. The Elliott is suggesting lower ground. However, the wave count or the wave structure down through here is not that simple. So it's nothing I can't rely on it to, be dominant within, pointing out a direction. So, that 79.50 as a resistance can certainly trigger a few events. So in the euro here, what we've been looking at here is pretty much from this low here, looking at an impulse wave to the upside there and labeling that as wave 1, and then the A wave either to here or to here, not that it makes any difference, and the B wave to here, and the C wave to here for wave 2. And then we're looking for wave 1 up here. We had the spike through here, and we have to label that as wave 2. But if that spike was removed there, we can see that the line of business is really through here. We pointed this out some time ago as well, but this line also follows through in the bigger picture as well. It's just the line of that the market's following. Now, if we remove this sharp spike here, then we would still really be up here as an A and a B and a C wave pulling back through to here. The market is moving into, on the daily, is moving into the overbought scenario up through here. So we need to be mindful of that. So we've got the, this over bought here and the US dollar oversold. So, we need to take that on board. However, in terms of looking at this on the sort of 5-minute chart here, we can see, and what we were looking for this particular orange line here, the 72, that was resistance to this point and now has become support. So that's a critical point. So that would really need to hold as support. If this became the resistance, then that's over at that point. If you had long positions in here, then you need to stick them under the group 2 here, under the 138.63, under the 65 here, and this is group 2, the 65, 72, and the 80s always. So even the market being held within group 2 here, as I would have pointed out many times, is that it is a positive, it is a sign of strength, and it has shifted from resistance to support, and yet we need to see further upside. If you do have a long in here, then you want to look to add to those long positions on 138.80 here, and then sort of hold on, because we'll be looking at a wave 3 up through the 139 and continuing higher. But a move dropping out of group 2, it's weakness, and you'll see it back down at the 138.50 and 138.30 here, and kind of ignoring that spike here, you'd be looking at this as an A and a B and a C wave coming back into this area through here, probably bouncing off the trend line here, of course, but that sort of thing. So that 79.50 on the US dollar is really quite a critical sort of play. Yes, while we talk about this, I'll come back to Australian dollar a little bit later. We'll go to the to the US dollar yen now, and just on the weekly chart, we were looking at this being wave 1 up here and pulling back for wave 2 as such, so don't have to worry too much about this, but basically a move down through here, and that's what we were looking for. And we could see that from the high here, we were looking at this high being here. We could see that this move through here, you can see that all the highs and the lows here are overlapping one another. So we know that that's corrective. Okay, so we're just looking for the break to the downside, and that can be in play now as well, because we're looking for this to be down here and then moving back through to here. And then moving down here. So this little move down through here on the daily, we've got 5 waves in that. So we're looking for a little retracement back and then a move lower. So that's what we're looking for in the yen crosses. And just drilling into that last point here, if I can just go back, I probably jumped a bit too far here, but from the 103 here down through to here, we're looking at that being in 5 waves. From the 103 down to the 102 here, so the 1, the 2, the 3, cross for the 4, down for the 5, the A, the B, and the C. That the 61.8 retracement level is higher up here, of course, but there is a bit of a count here. I mean, the A, the B, and the C here may just be the A wave, then a B, then the C moving further up here. So look, the 102 is a retested resistance. Look to short it. The 101.80 here, look to short it, and we'll be looking down at the 100 at that point there. See, this move up through here on the 5-minute chart here does count quite nicely as an A wave, A, B, C for the B wave, and looking up for the C wave here. But all of this here could just be the A wave. That's why it's important to wait for this 102 to be a retested resistance. Otherwise, everything sort of moving along the 102.30 area is where we'd be looking for a top in this area through here. So when we come to the pound yen, we're looking here, and yesterday we were also looking for counting 5 waves down through to here, and we've got those 5 waves now, which is down for 1, back for 2, down for 3, 4, and 5 here. And we're looking for 61.8 retrace, 50 and 61 point is up here. But I think it's important to look at the 172.50 area through here, because this is the last block of supply here. And also to group 1. So group 1 would be from 172 would be 10, 20, and 30. So if support is found on top of 30, which is group 1, well, then you'd be looking to get to the 50 there. And it's not that you'd want to sell it right here on the turn unless you knew your setup or what you were doing and so forth and managing your risk. Otherwise, look for, this move's got to move up an A, a B, and a C. So it's got to move up further through here, because this is just in 5 waves here so far. So there'll be some sort of retest and another move up through there. So just drilling into this with a little bit more detail here, coming back over here down from the high here, we're looking at this down for 1, back for 2 here, and then we're looking for wave, no, that's right, sorry, 1, 2, 3, 4, and down for 5 here for wave 1, back for wave 2, 5 waves down for wave 3, which is a little bit shorter, but then wave 5 is short as well, even shorter still. So we've got wave 4 and wave 5. So, and now we're looking for the A wave, the B wave, and the C wave. The 50-60% is up here somewhere. So once again, it's just a matter of observing it and looking for weakness in these areas of 172.50, finding or failing to find support on 172.30. The top of group 1 here would see it back at the 172. So if the 70 from here, if the 172 became the retested resistance, then you can start looking at the short trade from in that point there as well. And you'd also, as I mentioned before, the 79.50 on the US dollar would be critical for this play as well. So moving on to the yen, the euro yen, the same thing as well. So the little rally here that we're looking at is the same thing. In this case here, we've got the 1, the 2, the 3, the 4, and the 5. And for the A, the B, and the C here, this is the supply level here. So looking for it to fail at this point here. But in a bit of a nutshell, this is a retest of 142. So once again, you know, if the 142 becomes, you know, support, well then obviously it's strong and it'll be moving up from that point. So basically we're looking for weakness to short. So that's what you need to wait for. And with weakness to short, you'd always be looking for, well, you know, I use the Elliott and the levels, but in terms of Elliott, you'd be looking for a little 5 waves down like that, then a retest in 3 waves here, confirming that 3 waves here and getting some sort of overlapping wave structure. As such, it would be the point to do it. And using, once you've got the pattern, you want to be working with the price, because you know the price is important, because that's where the orders are going to be sitting, and you need to be on the right side of the strongest orders. Okay, I'll just touch on the Euro Australian because we're looking at it. Look, but until it becomes support on the 150, we're not interested, or the 149 becomes the retested resistance, then we'd be interested in as well. But at the moment, it's between a hard rock and a rock and a hard place, and we're just going to leave it for the time being. The Australian dollar, we've got the platform just crashing. It crashes because I've got you know, so many charts open, but I just want to. I don't have the Australian chart open at the moment, but look, the RBA rates are today at 230, so it's basically buy the rumour, sell the fact. We're looking for 93.50 as a 50% retracement level. Being above 92.72 is positive. So far the move up has been for the A wave, and the 3 big swings you've seen on the 5-minute chart going sideways across into the 92.72 is the B wave, and the C wave is starting to the upside. The shadow RBA, which is a bit of a new thing, which is a bit of a mirror image of the RBA, they sit down and talk about should the rates go up or not, and why, and all the rest of it. They're old RBA members, and they suggest that rates will stay the same. In fact, should stay the same. But they're all just opinions. So make sure you've got your positions, your orders in the market to protect you on both sides. All right, cheers.